Hi friends, welcome back. So, is the stock market manipulated? That's the subject for today's video. It's a common question among beginning traders and beginning investors. I want to share some thoughts and get yours as well. So check a look at this. This is an old adage. If I make money, it's because stocks only go up. If I lose money, it's because the market is manipulated. And this is actually the headline today why I'm bringing this up. Traders are cashing out of markets in mass. And essentially, this is what traders are doing, professional traders, the big money. And then we're talking about billions of dollars are coming out of stocks and junk bonds. Now, I'm bringing this up because we had this really funny situation happen with the Trump media stock. We've been following this thing. It's up, it's down 10% one day, up 10% down the next day, up 20% one day, down 20%. But this is kind of the market that we've been in these days with everyone's on their phone, trading stocks, etc. And essentially, the Trump people, they're saying Trump media flags NASDAQ on possible short selling of shares. So they're essentially calling foul, saying manipulation, manipulation, manipulation. We're going to get into this because I think it's kind of a funny one and it's all public. First, though, I want to show you that if you're seeing red in your portfolio, you're not alone. A lot of people have been experiencing this. And in fact, the big bubble, which I've been calling for a while now, looks like I called top, is NVIDIA. It's now down 10% in one day, which is absolutely insane. Meta was down 4%, Tesla down another 2%. It's like 63 up from the top. Eli Lilly has been one of the ones that has been exploding lately. That also went down. So it seems like the ones that were essentially moving up quite a bit were moving to the downside. And again, people, when they're making money, it's so easy, etc. And when they start losing, when things start going down, they start calling manipulation. There's NVIDIA down 10%. And the big one today, which is crazy, super microcomputer down 23% plus another 0.5%. In the after hours. I know a lot of people are in this one. This is essentially a meme stock. It is down 40% roughly from the top. That was from March 13th to April 19th. So you can see how quickly things can turn. And again, I go back to this point is this is how sort of new people think. They think, okay, if I make money, it's so easy, right? It's because stocks only go up. And if your experience in the market is very short, that's what you would think because that's all you've ever seen. And you start losing, you start calling that it's all manipulated. So I want to introduce a concept to you called valuation. This is coming from Investopedia, their definition. It says here, the analytical process of determining the current or projected worth of an asset or a company. So basically, if you look at stocks and you understand how this stuff is and understand companies, you'll say, okay, there's an inherent value here, and I'm going to buy things on said value. But stocks don't necessarily move up with their fair value because also too we're in a market that involves supply and demand. But I just want to bring this concept up of valuation, right? What is a fair value for something? I'll give you a couple reasons why stocks go up. You can talk about any number of reasons, but this is something I came up with. Why do stocks go up? So A, market participants buy what is perceived as a good value, right? So if you want to take a look at something like a Warren Buffett, he's considered a value investor. He looks around in the market and says, okay, which companies are undervalued, right? Which companies are going to generate better cash flows in the future? Where can I essentially get something that has an essential inherent value to it? However, that's not the only reason why stocks go up. If someone like, say, Mr. Buffett finds something undervalued and starts buying it. Another reason, though, however, is market participants anticipate stock will go up and buy it, right? It's two different ways of thinking about it. Are you thinking about stocks in terms of like they have some sort of value? I'm going to do some numbers. I'm going to come up with a formula to figure out what that is. Or am I just looking at a chart and saying, well, other people bought it in the past. I think more people are going to buy it in the future, and therefore I'm going to buy it because I think it's going to go up. That is a speculation thing. Now, it doesn't mean it's necessarily wrong because you can make money. It's true. You can totally make money in the market just playing the, I think it's going to go up thing. Nothing to do with value. I think it's going to go up. However, oftentimes, though, this creates a bubble and you ultimately get burned. That's why I go back to valuation because I believe, in my opinion, that some things do have an inherent value. So, for example, my book, which I recommend you buying, is called Positive Angle. There's inherent value to this. You should pick it up. It'll help you. I wrote it representing a lot of experience that I've had in my life. I'm 49 years old, which you may or not know that. I don't look my age because I live a pretty positive life. I'm smiling every day and not out to cheat people all day, every day. But like what you see on social media, that's sort of the thing. And I do this stuff for fun, guys. It's a total blast to do YouTube every day. And also, too, I want to educate you. I was a professor for about 10 years and always appreciate coming back for more. So check out my book and let's jump right into what professional traders were up to today. This is actually kind of interesting. And this is sort of why I'm going to this. I want to read it together with you. It says here, the great market rally of 2024 looks dangerously close to unraveling as Wall Street's once invincible bull brigade begins to withdraw its winnings, right? So one of the things that's going on with stocks, you guys might know this, I can have a bunch of unrealized gains. So I bought it, whatever, a year ago, 2 years ago. I watch my account go up, but actually there's no money in your account per se. You have a stock and you can see the price of the market, but you actually have to realize your gains by selling said stock, right? So that's what's going on. People are like, you know what? Time to cash out. This says here, with treasury yields breaking out, right? So essentially what people are doing, they're managing their money. Should I put it in stocks? Should I put it in treasury? Get guaranteed money, right? That's one choice. A hawk is saying, you know what? We may not be lowering rates. That's what the hawkish Federal Reserve being hawkish. The Middle East strife flaring, these are just different things, right? So you guys know about the Iran and Israel situation. We've been talking about that. And also too, money has just been pulled out of equities and junk bonds at the fastest rate in more than a year, right? So people are selling. Dip buyers have been muzzled. They're not buying. The S&P 500 fell every day this week as the top 7 tech behemoths closed nearly 8% lower with volatility. The amount of money that we're talking about here, and I want to just read some more so you guys can see this here. Hawkish posturing fans selling pressures that has been building across investor ranks. Redemptions from stock funds, so people pulling their money out, reached 21.1 billion in 2 weeks through Wednesday, the most since December 2022, according to Bank of America, citing data from the EPFR. Investors pulled cash out of junk bonds at the fastest pace in 14 months. Again, according to data from the LSEG. So basically, people are selling. This is actually a pretty bad week for tech stocks. The whole year, though, has been like, the Magnificent Seven, etc. And I guess this is the worst week in a couple of years. And this is actually the stocks that are the most popular, right? Your Meta, your Amazon, Google, Microsoft, Apple, and Tesla, which you talk about on the channel. It's always a fun one to talk about. You can actually take a look at this. So I sorted it by a year to date. So from the beginning of the year to now, Meta's been up 35, whereas Tesla's been down 40%. And you guys can kind of track this stuff here. Why do stocks go up and down? It just depends on your perception of the market. So I do think things have an inherent value, but as I told you before, sometimes stuff just goes up because there's all this speculation that you think it's going to go up, and therefore you buy it and you convince other people to think it's going to go up too. But the problem is, though, eventually, valuation starts to catch up with you, and I show you guys this all the time. So if you take a look at the valuation grade of Tesla, essentially, how do you value a company, right? What's the actual fair worth of this thing? You're getting grades of F's and D's. Not so great, guys. And it depends if you look at a non-GAAP or GAAP. That's a different style of accounting. Their last earnings report, they had some weird, funky tax things. So that's why you have a divergence between the GAAP and non-GAAP. Also, too, though, I want you to pay attention to this PEG stuff. If this is, how can I say, if these numbers are accurate, and the reason why I say accurate, because when you look at forward numbers, these are just projections, right? No one knows exactly what the future is going to hold. But this would suggest, and you want to peg around 1, this would suggest that Tesla stock could go down by 5/6, or meaning that it is only inherently worth 1/6 of its current value. I'll do a separate video on this because I know people want to get the exact price target and this kind of stuff. But I'm just saying these numbers don't look good for Tesla. And it depends if you want to do a GAAP or non-GAAP. But I understand, guys, this is sort of adage in the market. From new people is, if I make money, it's because stocks only go up. If I lose money, it's because the market is manipulated. I want to talk about the manipulation thing because sometimes, and I make a lot of videos of this, but sometimes people don't realize like how much craziness there is out there among these pumpers on YouTube and social media. So this is the Farzad dude. He is a paid pumper for Tesla. Why do I say paid? Watch this video. It says Tesla stock paid by Elon Musk. I traced the money. You can see it for yourself. I have the receipts. Please take a look. And also take a look at this live show, Tesla stock investor cult legal. These are a couple of really big things, and I think it's really important to look at. They operate in a gray area, and do watch it. Now, this is what he's putting out. This is just like an hour ago. The Farzad dude, he's like, own Tesla stock, right? And if you don't know, they're voting on whether or not we should pay Elon $56 billion. Yes, it is billion with a B. And he says here, vote no on Elon's, and he's saying like, what would happen, right? Vote no on Elon comp plan. Elon leaves Tesla, stock crashes, sell Tesla stock, genius. So he's trying to convince you that if you vote yes to pay the Elon the $56 billion, everything's going to be awesome. And essentially at this point, it's like, okay, dude, we know you're getting paid by Elon, but it is what it is, right? And then the Sawyer dude, who's also one of the pumpers, he's like, I don't get how people don't understand this. And the Farzad guy says, Emotions plus short-sighted thinking equals Apple firing Steve Jobs. Anything is possible. It is not a good comparison. There's a whole bunch of things we've been going into on this, but I just want to point out though that be careful with the stuff you see on social media and ask yourself this question. Does Mr. Fawza dude ever talk about this kind of stuff with valuations, PEG ratios, or PE ratios in a reasonable way? Probably not. Why? Because he's a pumper. Does he ever talk about anything other things going on in the market? No, he doesn't. He only talks about Tesla all day, every day. Why? Because he's a pumper. So be careful out there, guys. Here's an example. I do this every day if you guys watch our daily videos. What's going on in the market? So it looks like the tech stocks were down. Small caps were up today. That's kind of interesting. Usually the money would be seeping out of these. So I was actually kind of surprised on that, right? So things do surprise you in the market. They don't necessarily always run on their valuation. Sometimes it's just because people think it's going to go up. Looking at the yields here, this is big. 2 years at 5%, 10 years at 4.63. Always keep an eye on this stuff because, again, you're always making choices, right? Do I want that guaranteed returns or do I want to just throw my money in the market, right? Moreover, take a look at this. This is the sectors. They seem to be operating in inverse. So today, utility was up 1.54. That were the winners. And then tech was down, right? You can literally see the inverse. When you guys track this stuff, you can see it. Financial services up. Communication services were down. You can also take a look at this. Dividend stuff was up. Momentum and growth stuff was down. You can also take a look at this. Also, food, agriculture, commodities, right? So those have been going up. And you also got your silver, soybeans, industrial metals. The loser today was platinum. Oil pulled back a little bit. We'll keep an eye on this one because with the tensions in the Middle East and also too coming up in the summer travel stuff, et cetera. So I personally expect oil to go up, but who knows? I can't predict what's going to happen with Israel and Iran. I just can't. I can follow with you guys, but that's a whole other thing, and it's really tough to know exactly what's happening with that. But do understand that it is part of the markets, okay? Moreover, let's take a look at this. The dollar is gaining on the yen, the pound, and the Australian dollar, but then lost a little bit to Canada and Swiss. Keep a track on the dollar as well. Also, I wanted to bring this up to sort of like understanding markets. We've been seeing a lot of crazy moves with Paramount lately. It's because there's been rumors of a buyout. First, it was like there was some sort of hedge fund or something that was going to buy it out. Now the rumor currently is Sony's going to buy it. Paramount's an interesting one because Buffett actually put money into this thing. I don't know. I haven't been following it like what he's been doing recently, if Buffett's been buying it or not, but I think they're down on their holdings this one. I said I think. I mean, they must be if they're it's down 40% in the past year. But it's an interesting one to follow because again, the point being, if someone thinks this is undervalued, they say, hey, I got there's some value here. Then someone will come buying up. In this case, someone being Sony, right? So this is sort of what makes stocks go up and down. So in this situation, maybe Sony will make it go up. Well, we'll see. But remember, the sort of beginner way of thinking of this is if I make money, it's because stocks only go up. If I lose money, it's because the market is manipulated. Now, there's an interesting situation. I wanted to cover the Trump thing, which is really funny. So first, the Trump dude, guys, I read this stuff, but I don't cover it all day, every day on the channel because it's so much of a hassle. But I guess his bond thing that he posted may not be good. So the judge is like, yo, something's wrong with this thing. It should be evaluated. There's always something, so who knows? And moreover, the stock, he's got that media company over there. It's been totally tanking, and I'll just come out and say it. This company isn't worth anything. Now, that doesn't mean you can't make money on the stock because some people have. But again, you have to understand that you're in a trade, right? As an investment, this is highly risky. When I looked over at Google, I think this was on Google Finance. It said they have 36 employees, which is not very much. And there's been like lawsuits between people who are participating in this thing. And trust me, it's a circus over there. And moreover, this is actually really funny. The one of the people who's like at the top of the Trump media thing, he was claiming market manipulation. True story. And he actually, it was funny. They put on their website on how to get people not to short sell it. So this is a common thing you'll see in the markets. So though, if something goes down, they won't talk about fair value. They won't talk about that stuff because essentially the fair value of this thing isn't really worth much. But they'll just talk about, people are out to get us and the system's rigged, that kind of stuff. So what they did, I was looking at their website. This is true story. It's really funny. They put on their website like how to tell people to write your brokerage. They made a form letter here on how to tell your brokerages not to let them short sell your stock. and the one dude, David Nunes, he's connected this thing. He was even calling out names of hedge funds. Oh, you're just shorting us. You hate us, etc. Manipulation. And then the Kenneth Griffin guy shot back and said, yo, you're a loser. So I find this stuff really, really funny because this is part of the market that we live in is people, when you're not talking about valuations anymore, right? When you're not talking about fair values of company, this is when you get into these kind of yelling matches of like, oh, you made it go down, or you made it go up, etc. Because this is also very real. You could make the case that Sony is manipulating the market if they buy Paramount because they announce they're going to buy a whole bunch more and they buy it, right? So there's different ways to think about this stuff. However, the best way to protect yourself. So one, I'll say, yes, you can make money in trades, but understand that it is a trade. But two, the best way to protect yourself is understand like sort of like a general-ish fair value of something. And I say generalist because it depends what kind of metrics that you want to look at. And we look at a lot of different things on this channel all the time, and I try my best to help you understand the market and also understand too, you don't have to put, and you shouldn't put all your money and all your eggs in one basket. That is just basic advice. The sad thing though is that if you watch social media, they get you to think that like, hey guys, you should like, YOLO on Bitcoin or YOLO on dog coins or YOLO on car companies, that kind of stuff. And it's just not great advice. You should never YOLO on anything because you set yourself up for massive failures, and then you go back to this kind of thinking, right? If stocks, only go up is because it's so easy, right? And that's what stocks do. But when you start losing, you start thinking it's manipulated. And I'm trying to educate you so you get out of this world and start essentially investing and doing a good job with this stuff. So anyway, I do appreciate your time, everyone. I know we talk about a lot of these things, a lot of stuff every day, but I appreciate you coming back for more. So thanks again, and I'll catch you next video.